Hello and welcome to another episode of the Uranium Market Minute. Today is Monday, March 21st, and this is episode number 95. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. As always, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. All right, thank you so much. Really appreciate you all being here. I do appreciate all of the support. The growing subscribership is very profound and very moving. So thank you so much. If you aren't already subscribed to this channel, please do so. If you do enjoy these videos, like the video, share it around. As always, we try to grow this audience and make more people aware of this investing thesis, not only because the more people invested in the space, the better the space will do, but also because, we're looking out for each other in terms of trying to find places where we can have access to yield in such a steeply rising inflationary environment. And we believe that uranium is one of the few places where yield can be had over the short, mid, and potentially even long term for these markets. So these markets are very choppy right now. It's very difficult to trade around the present situations in the world. And with the broad markets going down or chopping sideways, you have to be very on your toes and you have to be pointed in where your money is invested in order to get yields that can breach the levels of inflation and allow us to live well even during these times. So with all of that said, very exciting day in the uranium space as always. Hope everybody had a good weekend. The Uranium Boot Camp, the Uranium Investors Boot Camp put on by Rick Rule was on Saturday. I did present as part of a pundit panel during that event. I'm going to speak on that briefly, in particular to a question that I did receive from Rick on that panel. So I'm going to talk about that in the mailbag section. And before we do that, let's go ahead and just run through the daily scoreboard, talk about the movement of the spot price of uranium, what's going on in these markets. We'll take a look at the charts and the technical setup for a number of plays in the uranium space. And then, like I mentioned, I will discuss the boot camp and this particular question regarding target price in the mailbag section. So first of all, spot price of uranium had a nice little rally at the end of last week. We're up again today after a bit of a dip, $58 a pound mid-market. Still, we are making higher highs and higher lows for the spot price of uranium. Very good to see. We continue to hear rumors about sanctions. So there currently is a Senate bill in the United States that was put forth by John Barrasso, a senator in the state of Wyoming in the States, aiming to ban all Russian importing of uranium, all elements of uranium coming from Russia. Now, of course, that will still have to pass the Senate, that will have to pass the House, and then finally get signature from the president. And these things do take some time, so we're not holding our breath with that. But of course, that does speak loudly to where a number of government officials in the United States are at in terms of supporting domestic supply. And of course, Senator Barrasso has been an unwavering advocate for nuclear in the States, and of course also for domestic uranium production. And there are many companies with domestic production or development projects in the state of Wyoming. So he's been a vocal advocate. And on the back of that news, and that came towards the end of last week, is rumors coming today that high up officials in the Russian government are considering banning exporting uranium products to the West or to the US specifically. So again, these are just rumors. The Senate bill is real, but as far as Russian banning exports, that's still yet an unconfirmed rumor. But either way, clearly that's having an effect on the market. Now, I always talk about the spot price of U3O8 in the market minute, but there's many other elements of the nuclear fuel cycle, and I've talked about that in the past, but just briefly, you have conversion and UF6 that are also sold. Conversion sold as a service, UF6 sold as an end product of that service. Both of those elements are moving up strongly. Conversion, in fact, is up over 50% since the month end February. Now, these prices often aren't quoted publicly until at least once a week, and with the long-term price of uranium, that's published once a month. But we're seeing big moves in conversion. UF6 is up, I believe it was over 20% over the same time period. SWU, which is the separative work unit or the cost of enrichment, that is up over 12% since the end of February. And of course, U3O8 is up since the February lows is up over 25%. So we're seeing all elements of the fuel cycle move up, and there's buying pressure coming from the utilities across the sector, across the entire fuel cycle. The spot vehicle is only putting pressure on the U3O8 market. They do not buy UF6 like Uranium Participation Corporation did. They're only buying U3O8. So we're seeing pressure all across the fuel cycle, and that's really positive to see. To see these elements all going up, and of course, you often see a trickle-down effect with utility pressure eventually landing in the U3O8 world. So all of these things are moving up. We are full-fledged in a bull market for the commodity and all elements of the commodity. So I just wanted to make that point when we talk about the spot price all the time, but there's all of these other important elements of the fuel cycle, and they're all moving up. On Friday, Sput raised a very small 1.8 million, purchased another 200,000 pounds of uranium. They now sit on 52.1 million pounds. Their total NAV of Sput is over $3 billion now. Unbelievably huge. Again, the NAV when they took over UPC in July of last year was 600 million. So that's a 5x since July of last year in terms of the net asset value of this vehicle. Year to date, they've purchased 10.8 million pounds in about 9 weeks, and they've raised 577.5 million in new capital. Just unbelievable numbers coming from Sprott. They closed at a discount to NAV yesterday, and the fact that U3O8 is up, maybe they're breaching that 1% premium to NAV barely intraday. And as I've mentioned before, their traders are pretty on the spot when it comes to, being at a premium to NAV greater than 1%. Intraday, they are in the market issuing shares and raising money. They currently are sitting on 67.3 million in cash. Turning to the equity ETFs, neither URA nor URNM reported any change in outstanding shares on Friday. There was no mandated buying or selling by the ETFs. The inflows, however, this year, 2022, year to date, have given rise to over 500 million in mandated buying. And the AUMs of these two vehicles combined has increased by an astonishing 630 million in March alone. So just big money coming into the ETFs. That's very good to see, big volumes as well. Friday, we had a really strong day in the sector, and today we're seeing some follow through despite a broad market that rallied in the morning and is selling off throughout the day. Now is into the negative. So let's take a brief look at the charts here. Starting off with URA, looks like it's trying to make a higher high from a couple of weeks ago. I did note in this highlighted area the compression of these moving averages. Now they're all pointing up. It looks like we're probably a week away from that 50-day breaching above that 200-day again, which will be a positive bullish sign. And then zooming out into this Livermore accumulation cylinder, we're still very much within this pattern here. Bullish chart on all fronts. It has been selling off from that intraday high. I do expect in the next hour before the market closes, I would like to see us trade back up and at least close near that intraday high. Respectable volume here. Overall positive looking chart. Sprott Physical Uranium Trust selling off quite a bit intraday, however, still up almost 3% on the day. So considering the spot price movement, it's possible that they are at that greater than 1% premium to NAV, and definitely were intraday. So they probably were in that market raising some more cash. We saw a pretty hard bounce off of that steeply rising 20-day moving average. Just a beautiful chart. Looking at Cameco very strong today, up over 6% on the day. Very good volume. It looks to me like the market is definitely recognizing the potential for Cameco to continue to show high interest coming from the utilities in terms of Western source supply, although they do have a JV in Kazakhstan. But generally speaking, they're not reliant on any Russian elements here. They are producing uranium in Canada. They are producing uranium in Kazakhstan. They have care and maintenance projects in the United States, some of the better assets in the States. Will they bring those online? We don't know. It's possible. They're in the process of restarting McArthur River. And of course, they have a conversion facility in Canada. And so Cameco is literally the only publicly traded company with exposure to conversion, with conversion up 50% in a matter of weeks. That should be very positive for the company. So good to see Cameco leading the sector, breaking out above that previous high on very respectable volume. Beautiful, beautiful chart. All right, mailbag section. So I had, as I mentioned, I was on a pundit panel for Rick Rule's Uranium Investors Bootcamp this past Saturday. This was a great event, and if hopefully you all were there attending, and if you weren't, I'm sure some of that information is going to leak out here and there, but for the most part, it hasn't really leaked out. As I mentioned, I was very excited about listening to the presentation from the guys from WMC Energy. They're the trading house that seeks out and purchases uranium on behalf of SPUT. And as expected, they had a fantastic presentation. And all I can really say, without giving information from behind the paywall here for that event, was that they're very bullish on what they're seeing. And what they did share with that presentation, especially if you do understand a number of elements to this trade and to this to the fuel cycle, that what they expressed in that presentation really does look very bullish for the price of the commodity. I did have a question that came to me coming from Rick Rule on this panel, where he basically asked me, when you enter a stock, do you establish price targets and do you adhere to them? So it seems like a straightforward question at first, but it's really kind of a nuanced answer. So let me explain why. If we take one of our Uranium Insider Pro focused list picks, so we, as you know, may or may not know, for our paying membership at Uranium Insider Pro, we have what we call a focus list. This is a list of 10 companies or 10 positions, let's say. One of those positions is currently an options trade. So nine companies and an options trade position. We have 10 positions in this focus list, and we never go above and beyond that. We have a limited amount of capital, as everybody generally does, and we don't just buy everything willy-nilly. We will never just say, oh, I am buying this now and expect you to follow. And we actually have a window where we cannot touch that stock within 72 hours of a recommendation. So we don't front run. That's not the way we do it. We keep everything very professional, very above board. And either way, we limit this to a hypothetical portfolio. So if we want to buy something else, we have to sell something in order to buy it. That's just the way it is. There's no use in just throwing out buy recommendations here and there. And so, but if we enter a position for our focus list pick, let's say hypothetically we had taken out a position in, let's just call it security X 18 to 24 months ago, and establish a target price for that security based on a projected $60 a pound uranium price. Okay. For the sake of this discussion, let's assume that security X had reached that price today. Would we mechanically sell it because we reached that target price? So first of all, the first question we'd ask ourselves is, what's our outlook for the uranium price from here? As you know, if you've been watching or listening to the Uranium Market Minute podcast for the past 6 or 8 months, the answer to that question from us presently is higher. That's where we expect the uranium price to go from here, higher. In my opinion, these are the early stages of institutional money coming into this space. While the sector as a whole might not be in the first couple of innings at this point, maybe we're in the 3rd or 4th inning here. As far as institutional money and large fund flows coming into SPUT, coming into this space, I think we're in the 1st, maybe 2nd, maybe 3rd inning, probably in the early innings here. The amount of funds that can still flow into the space, and likely will as the liquidity improves, is going to surprise everyone, including myself, in my opinion. So considering that we have that outlook on the market, why would we go ahead and sell that security based on that price target when we believe at this point it is going materially higher? So due to the myriad of factors and developments that have occurred in the uranium sector over the past 18 to 24 months, you can see that rigid adherence to a target price is not necessarily called for. And that's essentially why I say that this question is more nuanced. We do analyze companies' present and their net present value. We analyze their forward cash flow, and of course we consider that when we enter a position. However, there are so many other aspects to a company that are nuanced that we look at that have and oftentimes much more importance than the expected cash flow of a developing or producing company. And those are elements that we consider this process that we have for picking these stocks in the space. There's obviously the management. Have they done this before? What have they done in the past? The jurisdiction that the project or the primary project or some of the projects are in, is this a jurisdiction that has historically supported uranium production? Are they currently supportive of uranium production? We look at the balance sheet very closely. We look at outstanding shares. We look at the share structure of the company is unbelievably important and something that most retail traders and investors overlook. You have to look at outstanding shares. You have to look at the warrant option overhang relative to the free float. Very important to look at that. So all of these elements we consider when entering a position. And no, we do not have a target price for that position. That doesn't mean that we don't watch it technically. Of course we do, but we focus primarily on the fundamentals of the sector, and the fundamentals continue to develop in a positive manner. Therefore, exiting based on a technical price target is something that you would do if you enter the trade solely based on technicals. And that's not what we do. We look at technicals when we enter, we look at technicals when we exit, but they're primarily informed by fundamentals. All right, so with all of that said, if you are a new member or if you're interested in joining our service, you can see our historical track record. You can see all of our current positions. You can see when we entered them. We can see why. You can see why we entered them. All of our previous content is available immediately upon joining. And as I've mentioned before, we do have a quarterly option if you don't want to commit to a year. That will save you a bit of money. We look forward to having you on board. And either way, have a great afternoon. We will see you tomorrow. Cheers.